market left us big clues right here as we prepare for the week, right? This comes as absolutely no surprise. Once we retested the upper Bollinger, let's run through what happened throughout the week that we get to this point, right? So let's take a look at a 30-minute chart. Now, there are videos throughout the entire week that can chain up the plays, and you can find the links in the description below. Watching the videos day after day will help you chain up the thoughts, my thought process. So please do that, so that this training video obviously will make more sense to you. And, as you catch on the daily thought process, you will eventually get more understanding and get better at this. So a big part of this week was understanding that beautiful breakout here, right? We talked about this many times, and I told you about this juicy liquidity at that 20-day moving average, isn't it? I mentioned this at least for 2 consecutive days. And the market was indeed very kind. In fact, we had a nested structure right here as well. Before I was unwell, I even told you that I was selling puts here. It's something that's in the money puts, if you remember that. I just want to check back. Which day was it exactly? 7th? Right. So I talked about this multiple times. Right. So check back this. This is important, right? The timestamp is there. So you know exactly that when and why I was talking about this before it happens. So check back the timestamp, check back the end of day summary, or right here, right? Discord members, you have to do this. So it helps you better in the understanding this. So when you understand that there is this liquidity here that was being built, the next thing you have to understand was that we were always in that buying continuation structure, right? When you understand continuation structure, you will not be so quick to call the reversal. During this continuation, what did I tell you? What did I tell you about this? Do you remember? That was on 8. I told you, for context on big days, that is to follow the trend, right? When you have relatively larger pullbacks, you have to follow the trend. And this is known as your continuation structure, because you're still buying in that green buying precision algorithm there. You understand that? The next thing that I told you was you have to be very mindful of some tapering algorithms. And the next thing I told you was to watch out for exactly the upper Bollinger. That's why we retested it. That was a clear target. If you remember this prior, remember upper Bollinger was still hanging like that, straight. I told you this will continue heading down because this is known as your supply overhang. You want to see the upper Bollinger trending down to a certain level. And I mentioned this particular level here. I mentioned this here, where there was a previous, where the bottom Bollinger was, right? So there you have it. And once it started trending down, and once you see the bottom Bollinger plateauing, your 5-day plateauing, and starting to trend up, and you see how we bounced off the 5-day several times. 5-day crossing above your 20-day moving average, and there you have it. We retested the upper Bollinger again. I want you, and I have videos every day running through this thought process. Discord server end of day summary every single day, running through the trade processes. You can literally watch the videos, run through the trading day analysis, and learn every single day if you want to. This is a month worth of trading thought process that is archived, not just in video, pre-market, but also during the market opening and post-market debrief. When you can combine all that together, you are practically you're able to learn. Imagine if this is 1 month's worth. You have to literally wait 1 month. But if you have 1 weekend, you probably can study everything together. That's the beauty of having archives. So this is what they mean by reviewing and studying. And sometimes you call it back testing. Fine. I don't really like that word, but if this is back testing to you, then do it. When you can understand that better, you have a deeper understanding of my thought process, how it happened in the market. And we are not predicting. And from there, you are able to learn how to manage your risks and understand how to be managing the market movement and preparing accordingly. Now, when you can understand that, you will become a better trader, naturally a better trader. So understand this, please. Very important. how we got here in the first place. And the next part I told you was to be worrying about tapering, isn't it? You see that? Do you see that? Instead of green that's buying, I told you watch out for the orange. Go watch the videos. See it for yourself. Do you see orange buying now? And I told you if you are going to dump, watch out for the blue. Are we dumping? I don't know, but the news seemed to be like so. But I want to bring out the key liquidity that you have to focus on for this week. All right? Now, the key liquidity for this week is very important. Let's talk about that here. Now, for Friday, I missed this because I wasn't trading on Friday. But do you see the dual algorithms here? I'm just going to retroactively just draw some algorithms just for reference. This may not be accurate, okay? But I want you to see it for yourself. And do you see that, right? Now, if I were to translate that in the 30-minute chart, do you see the dual algorithm here between your orange? Right, so orange was here, and then we started having a dual algorithm set up here. Do you see that? Do you see that's a bear flag that could be happening? Now, I don't know what's going to happen, but obviously the market was ready to control the buying for a sell movement here. If you understand what I'm talking about here, you've been watching enough videos, that's great. We somewhat are already speaking the same language. So this is it, right? Where we're communicating with each other. If you're trying to learn from me, you have to try to learn the language that we're speaking to each other. It doesn't matter if you miss this, right? Maybe it happens, maybe it's not, because there are plenty of ways to grab this liquidity, right? It can go straight down because of this orange. So this can happen, obviously, right? It can already have built liquidity on the way down, so green on the way down like that. Doesn't matter. If it's insufficient liquidity, it can even re-grab the liquidity like that and sell in the green before it sells in the orange. So you understand the concept of liquidity is not about predicting. It's about understanding where the liquidity is, so you're always prepared, and you understand your risk to reward, so you always maximize the potential of your trade. That is skillful. That is what real traders should be doing. Not predicting, not gambling. Right? You see all the predictive market things that are out there. Those are to fool the retail traders. Those are to fool the people without skill. They want to capture 90% of the people who don't have skill as part of liquidity, so the 10% of the people who have skill will be making money. I want you to be that 10%, right? So the predictive market thing is terrible for society, but it's good for you and me if we learn how to be more skillful. More liquidity in the market, as I always tell you. So it doesn't matter. Let's see how the market opens, right? Obviously, there's the immediate open at 6 p.m. later. And then thereafter, there's the pre-market where Asia opens, where Europe opens, and then where US market opens. So there's plenty of cycles where the liquidity can move. So don't be too concerned with that. As I always teach you, you will be able to find profits in the charts when the market opens. That's what we're training for. And that's what I need to prepare you for now. All right. Now let's talk about this first. If this dual algorithm setup works out immediately, right? And you will realize that if you learn how to do this, it will be applicable for you regardless of pre-market, after hours, or even during market. You can trade this on the futures market if you want to. It's going to be the same idea. Right, and so many futures traders, right, especially if you're prop trading, you are benefiting from this, and that's what we're going to do, right? Make sure that that was the original plan, that I want you to make as much money as you can from all these scamish companies, right? That's what we got to do. Allegedly, I have to be very careful with what I say now. Now, if this has continuations immediately, right? Let's say it starts selling in that orange or the green. That's fine. This is known as continuation. If we open below, then you look for continuation. You understand that? Then you see if there's continuation structure. If it continues to sell in that orange, or even ideally in the green. If it opens even redder, then you have to see if it grabs the liquidity from this blue algorithm here, right? Especially off that yellow 675. So pay close attention to that. See if there's continuation structure, it continues to head down. If it goes even further down, you're prepared. Because if it breaks even this blue algorithm here, 5-day moving average, close the cup, wait for 5-day retest, and you have an inverse cup where they have choked up all the buyers for another leg down here. A very strong negative catalyst will grab this gap. But once again, not all gaps are closed, especially on the way up. Not all gaps are closed. If you truly want to check historical gaps, plenty of gaps in the 200, 300, 400 ranges for SPY. Plenty. Unclosed. Even up to today, and forever they will never be closed. So whoever is telling you that all gaps must close, no, it's not true. It's not true. Okay, so I don't know if this will close, but you prepare, isn't it? And you know, I enjoy this gap only because of one big reason. Because your moving averages are all within the gaps. Now, if we do sell, 5-day will start trending down within the gap. Your 20-day will start to trend up soon in another couple of days within this week, and it will be in the gap. Your 200-day moving average is firmly in the middle of the gap. So this gap is going to be full of liquidity, and that's great. Uncontested liquidity in the gap. So they become very, very beautiful targets if we do have continuation days. Now keep that in mind. Keep that in mind. What does that mean? It means that if we have trend days within this gap, the moving averages are beautiful, beautiful targets. All right? So look forward to that if it happens. Keep it in mind. Okay, so don't be worried. If it wants to dump, if it wants to close the gap, it's plenty of time, plenty of opportunities to do that. So many, you can't wait to short this. Some of you I know, right? You have this mind, it's greedy, you don't want to miss it. I don't know why you think like that. The earlier you can overcome such mindset and start finding profits in the charts on a daily, regular, disciplined basis, the more profitable you will be. Instead of wanting to get in the action, wanting to get in the news, wanting to join in as part of the hoo-ha that's happening. No, don't be like that. All right. Anyway, there is a bigger liquidity here with the blue algorithm, right? And as I mentioned, by then, the gap will already be closed. Your moving averages will already be tested with some very clear targets. And if this truly wants to dump, truly wants to head down, all your moving averages will turn into resistance. And you will see a structure within this blue algorithm here for the market to want to head down again. And if you take a look back in the daily chart, you will once again see how the 5-day will start retesting the 20-day again, because we have already retested the upper Bollinger. So this is possible and this is acceptable if it wants to happen. And that is why I always tell you a true recovery is when, likewise, your bottom Bollinger starts reclaiming your 200-day moving average. And this is when you know the possibility that we break out from the highs will happen. Case in point, remember back then we had this, and once we break out of the 200-day, right? Case in point here, take a look, the bull run happened. Right, breaking out of that high which everyone thought was impossible to break. And we did it anyway. So don't be too concerned, because this is liquidity study. Liquidity, the market has to be moving by liquidity. The market has to move with orders. That's just how it works. There's no need to be worrying too much about it, right? Obviously, we want to stake higher, longer term positions, something like 10, 20, some of the institutions. They are, for example, like pension funds, right? They are planning something 20, 30, 40 years down the road. So obviously, they don't care what's happening now. They know that in 20, 30, 40 years, as long as they remain solvent, as long as they do not get margin call, which means they do not over leverage themselves, they can even position themselves to think that SPY is going to hit 800 or even 1,000. That's actually realistic on a scale of a 30-year time frame. So you must understand, different traders have a different perspective of how you're trading. If you're day trading, for example, you don't look beyond 5 points. In fact, you don't look beyond 1 or 2 points. 1 or 2 points a day is just what you need. If you're swing trading, and I hate this word, and I keep telling you I hate this word because people don't know what they're doing when they're swing trading. They're just gambling on a larger time frame. And it's gambling with more uncontrolled risks, with less understanding of the dangers outside your zone of control. If you can't even control an intraday trade, how do you think you can control overnight action? you're not even hedging your risk or managing your risk properly. So no, I hate this word, hate swing trading. I literally I don't want you to do it without understanding more. All right, now let's go back to the 30-minute chart here. So you understand the different liquidity areas you have to pay close attention to, yeah? You have to prepare to if this continues heading up. Market hours, you don't know. Something can happen, right? And that's the thing. It doesn't mean that it's bad news now. Something good does not land in another hour or two. That's the beauty of volatility. Anything can literally happen. So as long as we are buying up in that orange here, this is buying continuation, whether you like it or not. It's a large range, but it's still buying continuation, right? So as I told you, as long as we are above the moving averages, right, you just have to be very careful that this could still be a buying continuation structure, right? Whether it's buying, we continue remaining here. You don't know for sure, right? This could be like that. You don't know for sure. The market's not open. How do you know? So you just have to be patient instead of predicting, instead of hoping, right? Don't be hope trading. You're going to lose a lot of money. So watch out for buying continuation. As I mentioned, maybe we remain in this blue. You don't know that, right? So watch out for your moving averages as well. So level by level, algorithm by algorithm, plenty of levels to pay close attention to, right? And eventually, you do see back here, the green was building liquidity here on the way up. Right, so we had that push here because of some positive catalyst here, but it was very limited by this tapering. So you see that people were already starting to sell here because they know that something was going to land. And you see this weekend it happened. Insider trading happens all the time, allegedly. So you just have to accept that it's a big club, but you and I were not in it. And I don't need to be in it. I don't need to be doing criminal things. I don't need to be in it. You and I don't have to be in it to be successful, to be living a prosperous life, living a good, holy, fulfilled, purposeful life, feeding our families, being loved and loving others. We don't need to be in that club, right? So it doesn't matter. Let them do what they're doing. They will be judged in due time. So back to this, right? And when you have that sort of clarity and purity in your heart, you will be focused to do your job better. So I want you to be focused so you can do your job better. Can you do that? Now, just be careful, right? Especially if we do retest our moving averages here. That's just absolutely beautiful liquidity here. Now, along the way, when we do have like moves like this, I want you to be paying attention to all your moving averages, right? Because they will start making moves. Bottom Bollinger especially. If you see bottom Bollinger starting to trend up, for example, upper Bollinger trends up together with your 5-day, right? Remember, as I tell you, this can happen, isn't it? So as long as it's above the 5-day moving average, you have to consider this possibility. Before that, you have to prepare for that. Doesn't mean that you ignore and neglect it just because you don't want it to happen. You see the difference between someone who knows and is skillful and someone who's just delusional. Can this happen? I don't know. It may. At this point, it's still above 5-day. Market's not open. You have to prepare for the eventuality of that. Yes. So there will be clues accordingly if the markets retest firstly the moving averages. And you have to identify, very importantly, your liquidity here and how strong is it selling. I want you to look at the selling that has happened prior to all these. Now, pay close attention to this. We were generally selling in the magenta then. You notice that, isn't it? It's not very strong selling. A magenta like that looked like this. This was magenta. It's strong selling. We lost about 60 points in a month. That's huge for SPY. But if you see it in this case in the 30-minute chart, if you've been trading with me for a long time, magenta is not that strong. Magenta sometimes is a bullish control, but you see that it's generally selling in the magenta. So magenta, it's the dominant algorithm, but it's not the algorithm that will make you money, right? What will make you money is this. You see orange is selling in the midst of it, right? You see intraday orange is selling, intraday orange is selling, intraday orange is selling. Even better, sometimes within the mornings, green is selling, green is selling, green is selling. Yeah, look, green is selling. These are all our money makers. You remember, we make the money with the green algorithm. Remember, look, yeah, green. These are when we make money, but generally in that magenta. So magenta is to help me with my writing options. I use that understanding, and that's why I keep teaching you about dominant algorithms. When you understand the dominant algorithms, right, you can use that in your longer term strategies where you can manage your risks with more control. For example, writing your options. If they are covered, you literally have all the ability to manage the risks, right? Because they are covered. The word covered literally means that your risks are protected. So obviously, if you want to take on more risks, you take on more leverage, right? You increase your leverage by increasing your risks to rewards. So all these is just a way of calculating. So back to day trading. If you can't even calculate your risk to rewards in the extremely controlled environment of a day trade, how do you think that you can manage your risks in a larger time frame like a 60-point range if you can't even do that in a half a point range? So this is why when you learn day trading from me, you understand that this is just the means to the end, right? You are actually refining your skills to a very precise level. So when you apply it to a larger time frame, when you actually accumulate wealth and you are actually taking proper trades an investor would do, managing your assets and literally maximizing your assets for income, you realize this is a piece of cake. This is a walk in the park. This is a piece of cake, all because you have already mastered and finessed yourself on the extremely difficult day trading floor. Now, you don't have to be actually trading. You can be practicing paper trading this, right? Understanding the essence behind it so you can apply it in the larger time frame. All right, so just pay close attention because there is so much liquidity here. The market has built, tapering has always built liquidity. I mean, just take a look. The green has built such beautiful liquidity here as well, right? This can easily be grabbed, very easily, right? And obviously you wait for your macro liquidity indicators like this, your bottom Bollinger, as I told you, 5-day upper Bollinger, right to 20, and your 200, right along the wave this wants to go up. So I will not be surprised, right, if news land or we even grab this liquidity and then go absolutely ballistic. It's absolutely possible, right? There's so much liquidity here, especially the gap close. As I always tell you, if they want to play this market, the buyers want to buy it as low as possible, right? If bottom Bollinger can start catching up, will bottom Bollinger catch up? Let's see. Possible. You never know, right? Bottom Bollinger starts catching up to the 200 day. It's not too late if it wants to do that, right? And absolutely possible. So don't underestimate how treacherous the insiders play this, right? They will want to obviously liquidate as many retail traders as possible so that they are able to fill more orders of theirs. If you understand trading, it's always 1:1. One buyer has to be equal to one seller, and that's how it prints on the market. So they want to liquidate as many people as possible. You have to understand how the poor and the rich works. So let me just do a very quick explanation about this, right? In a downtrend, what happens to the poor? The poor cannot sustain a downtrend because they don't have enough solvency. So what do? They are forced to sell, right? When you're forced to sell, you're also known as being margin called, right? Because most of the time you do not own the ability to buy. Today, I ask you a question. Do you actually own your ability to buy stuff? So today you buy food for your family. Do you actually own the ability to buy it? Most of you don't because you're dependent on someone giving you money. You see, you don't have the ability as yet. Someone has to give you the money, in this case your boss or your employer, in order for you to feed your family. You realize that could be a problem because when the time comes, you are actually forced to sell. Now, when you're forced to sell, what's the problem with forcing to sell? You're forced to sell cheap. Do you realize that? What do the rich do? The rich will buy cheap. They buy it at a bargain. When you go shopping, you obviously wait for a discount. You wait for a sale. That's when you buy, isn't it? Why is it different in the stock market for you? You see, that's how the rich and the poor are. The rich will always have the solvency to buy at a bargain. So if it does drop here, if it does pull back, you will realize a lot of people will get margin called because they do not have the ability to buy. They don't have the ability to buy, and they're forced to sell. And guess who's going to buy at cheap? Yeah, you guessed it, the rich. So you and I, if you know already the game plan, then stick to the game plan and stop succumbing to your poor habits. You understand that? Your new identity is to prosper now, right? That's why we're together here. I'm trying to instill new values to you. I'm trying to instill new mentality to you so you stop wasting money every single day doing poor people activities. What do the poor do? They gamble. They gamble. Every single day they gamble because they have this hope to strike it rich. It's hope. It's fake. Their hope, it's fake. It doesn't exist. But the rich, what do? They're skillful. They make money. They accumulate wealth. Now, how many of you still entering the trading floor like a poor person? Abysmal. No, now you're a winner. You join our family, you're a winner now. You understand that? So snap out of it, right? There is a proper roadmap for you. There is a routine you got to take. There is a discipline you have to undertake. And you get onto the right path today. All right? So it truly doesn't matter. I truly don't care. I sleep very well in the weekend. It doesn't matter, right? So there are people that are just chasing the news every hour, just refreshing and just seeing what some of the key figures or the key opinion leaders are saying. What kind of life are you living? You're living for another person's comment. Does it matter? No, you're not living your life. Take back control of your life. Literally, you can control how much you make and lose. But if you just decide to place a bet when the market is closed overnight, without hedge, without understanding your risk and how bad can it be, and then you're subjected to the waves of people saying this and that and this and that, what a torturous life you live. You can't even fully focus throughout the weekend on what you need to focus on, whether it's on God or your family or the people who need your time and attention. Why? Because you're busy scrolling the news. This is not the life that's victorious. This is not what trading is supposed to do for you, right? Trading is supposed to do the opposite. Give you all the freedom you can have so that you can spend quality time on your true purpose in life. All right. So once again, second quarter of the year, you have to properly stick to it, right? You have to realign yourself, recalibrate, repurpose, and come back to the trading floor. Like what I tell you, if one and done is what you need to do, just go do it, one and done, right? Why are you forcing trades? Go practice on a paper trading account. Do that instead of wasting money. You can do better than that, yeah? Okay. Now, as I prepare you for the week, we're about there. Let's see where market opens. I will prepare you again just before market opens, so don't worry about that. Yeah, thank you very much. I'll see you shortly.